Over the last 30 days, Wall Street's fear gauge has been crushed. Meanwhile, we've seen a huge rise in melt-ups and squeezes across markets. But today we need to talk about dark pool transactions. What's occurred over the last trading sessions might surprise you. And it's leading into us thinking that there could be a little bit of a pullback in December. Today we bring you the stats for that along with our thoughts on 2024 recession. Yes, Citi expects the S&P 500 earnings to climb, but meanwhile JP Morgan is saying, hey, not too fast. It looks like it could be a very tough year. I think people are very divided on how next year is going to work out. And JP Morgan believe treasuries, utilities, and defensives are some of the areas to be in. So who is correct? Well, today we need to talk about more the near term as we saw the S&P 500 reach our perfect level and then get crushed straight back down. Could this be the beginning of a Wyckoff distribution on the smaller timeframes? The Mag 7's in a coil and semiconductors are getting some massive transactions on them. So we need to talk about all of that along with what's going on with the US dollar right now and what are corporate insiders doing with their stocks. Well, welcome back everyone to the Daily Show where we talk about markets around the world. My name's Tom, and if you like anything to do with markets, we've been doing this Daily Show now for over 3 years, so make sure to subscribe and smash that alert button. We do it every day. Let's discuss rotation straight away. And of course, big tech stocks were some of the ones coming under a crunch over the last 24 hours. The dark pool transactions, though, were where everything was at. And we'll discuss that later on today's show, along with some inside information. What's going on with fear and greed index? Well, greediness is still here to stay for now, but we didn't hit the extreme greed yet. And we kind of expect to maybe hit that more at the end of December. And we'll talk about why in today's video. Let's move over to insiders though. We all probably think that technology stocks are overly expensive. And you might look at metrics and say, yeah, they probably are. However, insiders are actually buying. Now, this is pretty rare because insiders tend to buy and they tend to be correct over previous history dating back to 2011. That's an interesting one because if we do see pullbacks coming through, could it be that technology is actually going to do better than a lot of people expect? Well, as it turns out, there are some other things that we need to be thinking about as well in terms of insider buying and selling. We just hit a 6-month high or a 0.54 ratio on insider purchases to sells. Now, that also tells you that across the board, insiders are getting a little bit more positive on the markets. If you want to find out more about this, remember to subscribe to our free weekly newsletter. Links in the description down below. All right, let's move over to some other interesting charts. This one here will probably blow your mind, but for any longer term viewer, you would already know that there is a huge correlation between the US dollar and obviously stocks. Now, this is from October 3rd, and it just shows you the outperformance of everything since the US dollar has fallen off. We've basically seen silver do the best, gold do amazingly well. I like to think of silver as like Ethereum versus Bitcoin as gold. And yeah, silver always gives you better gains, but it gets a bit wild out there. And of course, Qs, treasuries, S&P 500. Notice that treasuries have now overtaken the S&P in the recovery. And more on that later because there are some really great stats around treasuries moving forward. So what about current retail short leverage positions? Did that spike of the last 24 hours just ruin everybody and start to reduce the bear positions? Well, the answer is kind of yes. We actually saw bearish drop off on both the Dow and the DAX over the last 24 hours. And I would say that's people getting liquidated. And this is a good sign that we could be in a point here where there is some massive resistance. It's the first time we've seen this through this entire rally moving up. More on that as we look at the charts soon. Investor sentiment across the board is not quite to where it was in August. We have been talking about other sentiment surveys, which have shown one of the largest turnarounds from being bearish to bullish ever, but they're still not quite where we were before we sold off in August. Maybe this is going to be a shallower pullback based on those particular stats. Here is what usually happens when consumer confidence does well in markets. Remember, you do want to be following kind of that Munger Buffett advice generally, which is when everybody hates the market, yeah, you do tend to get much better longer term returns than when everybody loves the market. We're starting to return back to the love, so it could be time to be cautious. Here's a bit of a chart in terms of some of the data we've been sharing, and I guess this one just shows you what has happened in a 28-day rolling average to the end of the year when we're talking about a January to November 10% plus year. Now, this is interesting because what you'll notice is that as we exit out of November, we do tend to see a bit of a pullback at the beginnings of December, followed by a rally into the end of the year. That's what generally happens in similar statistical years. Let's have a look at some other stats here. Of course, we have the stat of the melt up, which kind of makes us believe that when we have those plus 8 days and plus 7 days, such as we had this year, we tend to go into 60 days of melt up. At this stage, the market has been melting up, and it could mean that pullbacks are not really deep. So that's something that's going to be a bit of a problem for bears. It could be that we actually have so much rally in here, so many insiders buying, all of those types of things, that when we do get pullbacks, they won't be super significant. First trading day of December is almost upon us. I'll put this in some different charts so you can see it. 36% of the time in similar years, we have seen a bearish day on the 1st of December. Now, we're on the 30th, so of course, that's a little bit different. But yeah, we tend to see bearish sells on the 1st of December. Will it be the same stat again? Certainly worse than a coin flip in terms of the bull favor there. What is going to do well, though, over December period? Well, traditionally, we've actually seen small caps do a lot better through that December 15th period after you can see that normal kind of sell-off does occur. And this is where they run into January. It is really time for the market to find some breadth, because at the moment, the breadth is terrible in this market. And we have some stats on that as well coming in the next couple of days, which I think might blow your mind. VIX volatility crush, that's going back all the way back down. As we know, the VIX has gone underneath 13, so it's at that historical kind of low period. And it means that protection and basically, big move-based strategies are becoming a lot cheaper. That's when you actually need to be thinking about, well, if we have coiling markets such as we do right now, then we do tend to see big breakouts each way and some explosive moves with huge spikes back into volatility, something we're looking for. Another kind of chart here just to show you monthly small cap relative return since 1979 over these periods of months. And as you can see, relative to other sectors of the market, it often does occur. Let's now move over to the rate hike cut cycle. Of course, we saw JP Morgan saying -8 next year in terms of at some point, and we've seen other market participants claiming that it's all going to be all green, all good. Well, remember, central banks do not cut out of the goodness of their heart. I've said that many times. They broke something, and we can kind of see that by other central banks around the world cutting everything up. We also know that a huge reason why probably the markets are squeezing right now is because global policy is becoming a very loose policy. We're seeing loosening across the board. And if, remember, the Federal Reserve choose to not raise rates during December, 100% of the time we have not seen any more rate hikes. And we've seen a turn soon after, which has benefited things like gold, which has also benefited things like treasuries, etc. Here's the performance during a recession. Now, not all recessions are the same. Of course, we have that stat coming up that I've talked about. But just remember that in general, it gets into a shaky year. So definitely follow the channel, because 2024 is going to be what I would think is a big trader year. Ups, downs, and all arounds. Of the last 14 reads, 11 of them have ended in recession, not soft landing. So the soft landing narrative, while it is possible, is of course less statistical. Let's now talk dark pool transactions. This is where things get really interesting, and it could be a sign that we are about to see that little pullback into that data that we tend to get. First up, we already talked about this one. Semiconductor ETF, big dark pool transaction at the peaks while we're in coil range. We've also seen a large transaction come through on the Qs. Now, to put it in perspective, large pool transactions down here led to a big hike and a move up and a melt up. What about over here? Well, it's something that's starting to get a little worried. And of course, this is all happening at around those same points. Soxal as well, a 3x bear or bull indicator here usually has got two massive transactions on it. Remember, they could be looking at the short end here. So yes, we have Soxal, semiconductors, Qs, lots and lots of things. And it doesn't just stop there. Other Q products are also seeing large transactions on them. So we've basically got this technology kind of ball of big transactions coming in. And we've already suspected that the Mag 7 and of course, what we've been seeing on the big tech semiconductor stocks, they're starting to slow down and coil around. We want rotation, so it's not unexpected to see this. But at the same time, this is showing weakness. And I think looking at some of the Mag 7 stocks, you'll see what I mean. AAPL, Meta, etc., starting to look a little bit weak. What about the big options that were going through over the last 24 hours? It was actually a massive options day, 41.3 versus a normal 39.1 in terms of options. 57% calls, one of the high call ratings recently, and 43% puts, with a 25% retail single leg buy. Now, that probably means there's a ton recently of calls going back into the system. And when we look at put call ratio very soon, you'll see what I mean. Let's go across the board. It was a lot of different moves, notably, of course, SE getting crushed here, 3.11 times 90-day average volume. I did also see a little bit of a movement in things like solar stocks, though, which was towards the positive side. TAN and a few others starting to look a little bit better. Let's move over here to the last 5-day rolling average. This shows us everything to do with rotation. And so far, it's been gold, metals, clean energy coming up out of nowhere, and a few of the solar also starting to rotate back up. Last 24 hours, you can see solar doing better, clean energy doing better, two of the most beaten down sectors, and my favorite little bio there actually coming through with finally a decent day. Now, you might think, well, look at that. Semiconductors actually went up. They gapped up massive, then got crushed by the end of the session. So we'll look at that right now. Let's get into the charts and look at the lead indicators first. Effective yield not going up. So that's not a bear indicator at this stage. We did see the equal weight market though. So this is the S&P 500 equal weights, see a bit of a sell. So of course it broke out and then got crushed back down. Interesting. Something for us to certainly start to get a little concerned about. And then we move over to some other markets. Now, my favorite bond indicator, that's still going strong. If that keeps rising up as we see a pullback, if we do get one in December, then of course I would be saying, well, that looks like that pullback's going to be met by pretty big bull demand. We'll continue to watch that one here on the channel. And US 10-year got crushed some more, which led into, of course, treasuries doing really well. So treasuries have been doing extra stellar recently. We've talked about the turn. We've talked about the most likely basing structure due to the huge volume that we've seen going through. And I'm sure Bill Ackman is pretty happy with this. Some super strength coming off in this area here. And of course, this was a nice move. But notice, and the reason I want to talk about treasuries, notice we're almost at that gap fill now. Now, when you think about this with the S&P 500, we have two major markets that have been going really bullish recently, hitting into those super critical resistance points. Also, PCC, put call ratio, look at this drop off here. So we're getting into the bottom end here, one of our kind of like little parameters of extremes. Interesting period, certainly something we'll be watching. PCC drops, and it's showing that we do have quite a few calls coming into the system. And again, it's all happening at these peak levels. Is the FOMO too strong, and maybe a little bit too many retail traders have traded towards the bullish end? Dow Jones Transportation Average doesn't give us any indicators. Home builders tried to break out. You can see it set off my alert, but by the close of the day, pushed straight back down. Now, this comes into those Wyckoff style scenarios, and you'll see a lot of this on the charting at the moment, where you have kind of like a dull market that's been driving higher, and it's pushing some key levels and then getting crushed straight back down. Now, it's possible that these are UTs or UTADs on some of the markets that we'll look at soon. So, yeah, some weakness coming in here, and obviously one we'll be watching. I'm going to set another alert above here because the close was not confident, and I think that's something we need to be looking at. Central bank squiggly lines now. Let's go and look at the Fed. Fed actually dropped liquidity. So did world central banks over the last 24 hours. Again, at the peaks, dropping liquidity. Okay, another bit of a warning sign. Copper still doing well. I'm loving the metals still at the moment. Obviously, we've spoken about that quite a lot. US dollar stabilizing down here in the lows. Now, the thing about the US dollar is it actually has shown the first sign of wanting to get a little bit up. So remember, we just looked at a correlation at the start of today's video that showed us that the US dollar weakening has been super strong for the markets across the board. Well, although last 24 hours we didn't have any buy pressure, around here is actually the first sign of slight recovery for quite a while for the US dollar. So yeah, interesting one. Only small time frame action at this stage. Obviously not much to go off in a sea of huge amounts of red, but yeah, little bit of strength coming in for those day traders and scalpers out there. GDX stock and gold in general still hovering around 2050. I'm looking for weekly closes here, so we'll update when we get that. but it's been pretty nice. I mean, you can't be hating on gold at the moment. It's been a damn good move. And of course, we have been following that move for quite some time, over 2 months here on the channel. Let's move over to US oil. I'm still confused. Are you confused? Let me know in the channel comments down below. What I mean by that is I don't really have too much strong direction. Do I know we're at a critical demand base? Yes. Do I like it? I don't know if it's replicable. And the difference between a lot of traders out there and somebody that's done it for a long time is often patience, react, don't predict. If you're not 100% sure, or at least statistically sure of what you think is going to happen next, it's not really worthwhile going at. We have seen some large dark pool transactions though in the stock world around USO. So that has happened down at that base. Tesla, well, I'm not sure how this is going to trade now because, of course, Elon Musk came out and went on a bit of a rant against advertisers, and I'm not sure how if the stock's even going to be affected by that. It did try to break out and then failed straight away in this level here. I think we said last time that we were thinking about some kind of 255, 254 level. It actually only got to 252 and a bit. So, yeah, very tough. I guess the trend is still theoretically up here on Tesla for now. Let's go over to some other sectors of the market though, and I want to talk about actually the Mag 7 here, which is a coiling market. Now, notice that this market has been trapped for quite some time. Now, why that's important is because when we go down to the smaller time frames, you can see here it's starting to get that real distribution side look on it. Now, there are some ways that we'll find out soon. We don't have really a trigger for it just yet. So just remember, we don't have all the information we need yet. Patience, react, don't predict. But this is starting to look a little nasty. And with the huge dark pool transactions, another one that's looking nasty is semiconductors. So we're on the heightened, let's call it heightened risk alert. Now you could argue, well, you've got a gap down, gap up here on semis. So they're going to push higher and we've got those insider buys. At this stage, the trend is up, so you wouldn't be too wrong. But again, the crushing, let's go and look at some of the actual market sectors in terms of the indices now. German 40, very overbought market in terms of it looks overbought on all the indicators. However, we still have huge amounts of retail selling it. Some of those positions did get wiped over the last 24 hours, and we've seen some shift into the buy side. So I would expect now if we do get pullbacks that we'll get huge amounts of reduction on the short end. I think it's 78% or something like that at the moment are still heavily short, and you can just see the pressure being put on. Unfortunately, it's painful for a lot of viewers out there and people that have been short this market, I'm sure, because it just keeps pushing higher and higher and higher, and every indicator under the sun is going the opposite way. What about US 2K? What's going on there? So we saw a break of the high, but then again it failed and pushed straight back down. Still coiled. I had an alert set here, and I was waiting for a closure and it just didn't do it. So now, unfortunately, I'm going to have to set a high alert. Not too much information on the US 2K at this stage, but I'm looking at actually the major indices. Let's go over to the Qs. So the Qs here, again, new high. Now that's interesting. Let's look at it on the NASDAQ perspective of the futures. So here's the NASDAQ futures. Now it's dull. It's pushing new high narratives all the time. And we don't have any lower low. So we still are technically in a squeeze towards the upside. But with those big transactions coming in, we are now hyper aware if markets actually start to turn. And there is a real distinct possibility that that could be coming statistically, of course, in only a few days. So we'll find out whether that does end up occurring. But at this stage, we have a new push. So some people are starting to think, is this some kind of Wyckoff distribution? We've got UTs and UTADs, potentially, the way you're doing the analysis on it. And I think we'll be focused on these two alert levels here to see whether we're getting a turn. S&P 500, though, is the more interesting one because S&P 500 pushed into our yellow box here, and that line literally got tapped and rejected. If you shorted that line, wow, not too bad. Now, have we set off any alerts? No, we haven't set our 45.39 alert. We haven't set our 45.23 alert, and obviously we certainly haven't set below. But again, we have a series of higher highs that are all quite weak, and this is starting to look UT-like, where we've got that huge pressure spike, sell off, but no turn. We'll be watching this market very closely over the next couple of sessions, so make sure to subscribe if you're interested in finding out more. Bitcoin, it keeps pressing that 38,000 and kind of failing around it. Again, dull. Yes, there's a lot of rejection weeks, I understand, but there's no turn yet. It's a melt up similar to the other one. So while we're starting to see those turns into defensives, we're starting to see large transactions coming through and all the signs that have us start, really going, okay, well, wait a second, we've got to be more neutral on this market at this point. We don't quite have a sell-off, especially in the crypto space. And if you look on our X account, you will see an amazing Bitcoin stat. So follow along there. I'm going to put it in tomorrow's video as well. Yeah, it is a phenomenally wild Bitcoin stat in terms of what happens pre and post halving events. You may be surprised. Let's go over to what news is coming. Of course, we do have some Thursday news, the OPEC meeting that's going to move around oil. And then, of course, we've got the core PCE price index. And then on Friday, we've got all our favorite ISM manufacturing PMI. And of course, Jerome Powell's coming out to annoy us all. So that's at 11 a.m. New York time. If you enjoyed today's video, make sure to subscribe and of course, smash that like button and click on the links in the description down below and sign up for our VIP free weekly newsletter. Some great stats coming your way as of the end of the weekend. I'm pretty sure you'll be surprised by some of them. Okay, thank you so much. We'll see you in the next one. Bye for now, guys.